Hey everyone, welcome back to my YouTube channel. I'm Xavier Smith. A few of you have asked for me to go over how I pick out my stocks for cash secured puts and covered calls. So I am just going to quickly show you how, first of all, I just find stocks and then I kind of just review stocks. All right, so let's go into it. I use Robinhood. And basically, the first thing you're going to want to do to just find stocks, like if you don't even know where to look, you can make a list and just put down stocks you know. Like this is like Disney, Ulta Beauty, Dollar Tree, Apple, SiriusXM, Ford. Just come up with stocks off the top of your head and you can just put them down in a list. And then every week you can just go by and check those options. Like make sure they're stocks you would want to buy. Just think of that. You're like, okay, Apple, Tesla, Meta, I like those. Put them all in a list. And then you can just keep adding to that list. Maybe every week you go through and just check out, oh, so what are the options looking like this week? Is it looking like I'd want to buy the stock anyways? Like if it's at its max, um, yeah, if it's at its max, maybe you wouldn't want to buy it. But if it's a little low, maybe you're like, oh, maybe I do want to put some options on that. So the next thing you could do, which I just found out, is you could on Robinhood go to custom screener and then say, okay, if you really wanted to just tell you stocks you could do this on, you could say, okay, average volume, I want over 1 million. That's good. That's good. I like over 1 million. Um, and then we say, okay, or would this be market cap? I'm gonna say like mid cap, large cap, mega cap, right? Anything above 2 billion, which is which is good. Oh my gosh, I don't mean to save that. Anything above 2 billion. You could pick a sector if you want. If you want dividends, you could do that. But then I'd just say options availability available, right? And then you can choose anything else you would like here, all right? Whatever you want. And now you're just going to have a list of stocks that are probably pretty good. They have over $2 billion. They have a good average volume, like over 1 million shares a day. And then they do have options. So you can just scroll through this list and just find stocks like Apple, Nvidia, Google, Meta, and we're just like, oh, JP Morgan. All right, let's check it out. We click on it, and then this is basically what you do. You just say, okay, here's JP Morgan. You'd say that's pretty high right now, but if you really wanted to buy JP Morgan, you could, right? And this is just like if you felt comfortable buying JP Morgan at this price here, which you can always check with the Bollinger Bands. It's kind of above its Bollinger Band, which isn't great, meaning it's like 2 standard deviations above its market, well, its moving average. But we can still check it. So you'd say, okay, trade options, right? It's probably going to drop because it's out of its Bollinger Band. And then you'd say, okay, you could like sell a put on it or something. And you'd say, okay, so this is for January 24th. In 3 days, I could sell a 260 put for 259, which is a 1% gain in a week. And you can go through that and say it's super high right now. It looks like it could drop because its Bollinger Band is like it's way above, right? It's out of its moving average. So maybe I don't want to do this because I will get 1%, but there's a good chance it could drop over 1%. And you say, okay, I don't like that one, right? Now let's find another stock. And you'd say, okay, I'll show you one of the stocks I picked for this week. It's a more risky one. So here I picked Snapchat. Let's let's look at that. Just because this was one I just found because it was really volatile. And I've been looking at volatile ones a little bit more, putting a little bit of the portfolio in them because they can give you massive gains. So we can look at the max, like clearly it's at a normal price. If we look at 5 year, it looks like it sits around like 10-ish, 10 and above, maybe 11. And it's at 10.92 right now. It's at 11. It's like at a perfect price. We can always look at the Bollinger Band and we say, okay, it's straight in the middle. Like it's right on the moving average right now. So that's pretty cool. Now we just say, okay, here's a stock we could buy, right? Like 3 months, it's at a decent price. Here's a stock we could buy. Now let's look at like what the options are looking like, because this thing is pretty volatile. Like here was at 1280, here it's at 1077. That's like a 15% movement. And I just saw it on like volatile stocks or something where it was up 8%, down 8%, up 7%. I'm like, holy, that's a lot. So if I go and trade these options, first of all, we could see if I tried to sell a put here, since this is at an average price, I'm not too scared of selling puts lower because it doesn't really go much lower. It can, but it doesn't usually. So this for 3 days, selling a put down to 10.5 would have to drop 4%. They're paying me like 2.5% for that, which is decent. But what I found out is you can just keep going out, right? Like most of the time, 1 week options pay you the most, but sometimes they don't. So we're going to say this is 2.8%, even though it's not. We're going to just say it is 2.8%. If we go down again, this is like 3.9%. That's not worth it, right? That's getting another 1.5%. It's like, why not just sell 2 of the options and get like 4.5%? But then here, if you go one more, they're going to pay you 92 cents. That's crazy because 28 cents, let me do some math. The 28 cents times 3, going 3 weeks out, would only pay you 84 cents, but just going 3 weeks out, it's going to pay you 92 cents. So you're taking on more risk from sitting on the stock for a longer period of time, but the amount of money you can get is pretty nice. Like this is 92 cents divided by the 10.5 you would put in, and you'd be getting 8.8% back in 3 weeks. And if you divided that by the 3 weeks, you'd be getting 2.9% a week, which is great. It's over 1%. So this might be something you find and say, okay, maybe I'll put like 10% of my portfolio in it and just take like the 8.8% gain. And if it goes wrong, well, you don't have that much of your portfolio in it. So that's basically how I find stocks. I just make a list of stocks I know, right? Then I go, and you can also make like this custom screener and it'll tell you a ton of stocks. You can look at daily price jumps, daily price dips, find out what's volatile if you're looking to be a little more risky but get higher premiums. Highest implied volatility is usually a good one if you're trying to make a lot of money off of options. But I'm not trying to make a lot of money. I'm trying to make pretty consistent gains. Oh, that's nice. I'm just trying to make consistent money. But then you can also look in my comment section and people say things like MicroStrategy, um, like this, selling a put on it. What the heck? You can also just ask people what they think because this is paying 17.15 for it. Well, 18 divided by 392, 5. Like that's paying 4.6% next week. Like if you're trying to be really risky, or get a ton of money, this is 4.6% in a week. But you can also look at the graph, and that's a that's a tall graph, right? That thing is up 2,600 past 5 years. So basically just make a screener and look through some stocks like weekly and you'll find something. Trust me. If you want to go for safer stocks, just put safe stocks in your list. All right. Or make the screener and make it like a $10 billion market cap at least. And you're going to find good stocks and you're going to make money. So thank you guys so much for watching. I hope to see you guys in the next one. And yeah, that's it from me.